market sentiment and direction following a Trump win. What is the Trump trade? We'll get this take from our next guest, Warwick Smith, CEO and director of American Pacific Mining Corp. He's also the host of the Speculators podcast. Very interesting show. Some good guests there. We'll talk about that. Warwick, your first time on the show. Welcome to the show. Good to see you. Thank you.
Thanks, David. Really appreciate you having me on.
Copper and silver and gold. These are some of the metals we'll be talking about today. On the commodity side, I want to get your sentiment on the markets overall as well. American Pacific Mining, we'll talk about your projects there and the metals involved in those projects. Let's start by talking about your reaction to what the markets did following the Trump victory. Dollar up, risk assets up, Bitcoin up, gold and silver down. Mm-hmm. So what do you think the markets are pricing in right now as we speak? 18th of November. Gold is trading at 2,600. If the S&P broke 6,000 points last week, it's now down to 5,800. What's next, do you think?
Look, I think it's going to get interesting from here. I think if you look back at 2021, it was like a way more risk-on market. And I think the thing that I find now, more than I have before, I think I'm a little bit on my own with this one, but I think it's a good take. There aren't really a lot of just quote unquote junior mining investors anymore. People invest in what's moving and what's hot, and a risk on market will float all boats. I mean, I think we've seen a lot of people talk about, gold's got to hit 2,500, gold's got to hit 2,800, 3,000, and then you're going to see juniors left, right? We haven't really seen that. And I think part of that is the economy's been tough. Yes, gold's been rising and it's been this trade of like this kind of fear trade, but that's not trickling down to the stocks. I really think what you need is a risk on market. And I think we're going to get that with Trump. I'll give you a couple of examples. Mm-hmm. Even though gold and silver came off, pretty heavily on the back of the Trump win. Look at something like Trilogy up in Alaska. So seemingly the issue with Trilogy was there's a road that needs to be built there into Rambler. That stock doubled overnight and has continued to go. It doubled up to a $230 million market cap simply because Trump won and there's going to be a Republican House and a Republican Senate. People looked at that and went, this is going to be an administration that wants to come in and see things get done, and permitting is going to get easier, et cetera. So even though you had the gold price going down, you had selective stocks doing incredibly well. I think you're going to see more of that. I think you're going to see more of a very much a risk on trade for everything. Cryptos are certainly going to get a lot of buzz. They did on the back of his win. So it's going to get interesting. Long may it stay.
Risk on sentiment under Trump. Let's elaborate on that. Why do you think we're going to get that?
Look, he's going to come in and want to stimulate everything and, this whole make America great again and really sort of push things forward and shift to having people with more money in their pockets. And that sort of gets people back into these markets, right? Gets people thinking about what's next and where can they allocate capital and how can they make that capital grow. When you're worried about, the cost of bread at the grocery store every day, that goes away pretty quick. And that's what we've seen over these last couple of years. People don't have that disposable income that they had before. Whereas if you start getting a guy who's going, okay, we're going to look internal, we're going to find a way to put more money back into people's pockets, people will allocate that capital. And that's really what I think we're going to see coming up. And again, I think it's just one of these trades that's going to float all boats, particularly on the risk on side, on the more risk heavy stocks. You're going to get an opportunity where you're going to see those rise.
One of the common beliefs, and I'll let you address whether or not this is a true fact or a misconception, is that if we were to have a risk-on sentiment regime, risk-offset assets like gold would sell off, right? Does that make sense to you?
Yeah, it kind of does. I mean, look, I think you're going to see a lot of that speculative money go into stuff like Bitcoin and some of the cryptos. Bitcoin has eaten gold's lunch for years now, right? There's way more interest from a younger generation in particular to invest in cryptocurrencies and Bitcoin than there are to put that money into assets like, gold and silver. We've seen that for quite some time. So I believe that that's probably the case, although I don't know how much it matters. Look, if gold peeled back to 2,200 or 2,300, we step back a couple of years and I told you gold was 2,200 or 2,300, you'd be jumping up and down with excitement. You can make an awful lot of money as a producer at those lofty levels. Great seeing it at 2,700, but if, quite frankly, from our side of the fence, when we're building and we're looking to put these companies, into into profitability and create excitement for our shareholders, it hasn't mattered. It just hasn't. And I think that's what a lot of these companies are saying. Now, look, we're not Newmont, we're not Barrick, right? But these junior companies are building what the assets for those bigger companies coming up. And so you need to have shareholders that are willing to write checks and create value and continue to create value in those companies. We'll see more of that with a risk on market.
Let's assume, and I'm not saying this will happen, but let's just speculate as to what may happen under this hypothetical scenario. We get risk on sentiment, so junior stocks go up, Russell 2000 goes up, Bitcoin goes up, but then gold goes down. Suppose we have a sell off of safe haven assets. What would happen to the gold mining companies under that scenario? Would it follow the stocks or the price of the metal?
Great question. I mean, it depends how far it falls. I would have to look back. I can't remember where gold was trading at 2021, but it was significantly less than it was
Well,
today.
let's just take a look at the charts today and find out. So
Yeah, perfect.
2021 is it was at 2000
There you go.
and now we're at 2600.
I'll give you a great homegrown example of this. So in 2021, American Pacific was a much smaller company to start the year. It was about a $12 million market cap. It ended the year ranked the number one performing gold stock in the world by the Wall Street Journal Mining Index at $140 million market cap. It grew significantly. And it grew under a $2,000 gold environment because it was a risk on market. Now gold's 2,700 and we're roughly a $45 million market cap today. And we've got significantly bigger assets, we've got significantly more cash, etc. So the where the market trades to me and how risk, quote unquote, risk on that market is matters more than the gold price. That's my personal opinion on this.
By the way, this recent drop in the gold price from 2,800 down to 2,600, this $200 move downward following Trump's victory. Have you noticed that sentiment shift in the gold mining sector at all? In other words, this drop in the gold price, has that been reflected in the last month or last week and a half right now in the junior sector yet?
And look, I can give those two examples that I've sort of given. We announced a transaction today, which I'm sure we'll talk about.
Yeah.
The stock's up 32% today. If you look at something like Trilogy, I think it's up about 140% since the Trump trade. So no, I mean that
Okay.
pullback in the gold price. And again, I'm looking down the food chain, so I'm looking at juniors because that's predominantly it's the company that I'm running, and predominantly we're looking at our peers around us. I haven't seen it. You may see it more in the majors. That's a question that somebody could better answer than I can. But quite frankly, in the juniors, you haven't
Yeah.
seen it, especially the well-run, well-financed juniors. You're in a position again where you've got a good, strong gold price, whether it's 2,800 or 2,600. I don't think it makes to me. It doesn't make that much of a difference.
Let's just look at how gold has performed relative to the S&P 500 since 2018.
Mhm.
Gold is up 105%. The S&P is up 130%, 129%.
Yeah.
So very close relationship there, very close
Mhm.
performance there. If you just take a look at 2018, for example, all throughout Trump's last presidency, and I'm sorry, my chart doesn't go back further than this, but the
It's
data
all
I
good.
have starts from 2017. But basically, Trump entered office last time, January 2017. The
Yeah.
S&P 500 during his last presidency, up until COVID happened, was on a one-way street up bull market. Pullback in 2019, slight pullbacks along the way, but the general direction was up. The
Yeah.
S&P 500 was up something like 28% that period. Gold, slight pullback around 2018. I'm just bringing this up because I asked the question as to whether or not gold's going to pull back once risk sentiment goes on, and that wasn't the case last time. We had a risk on sentiment for 4 years. Again, glitches along the way, but the general sentiment was up. Gold went up 40% from 2018 to 2019. Yeah, before COVID hit, and we know there was a lot of stimulus. I'm stopping around 2020 because there was massive monetary stimulus after that, which propelled all assets up. But even before then, gold was up 40%. So I'll just like you to react to these stats, please. The fact that gold doesn't necessarily need a huge sell-off in the S&P 500 to do well, and the fact that gold was up 40% during Trump's last presidency, even before the Fed stepped in during COVID, which pushed it up even higher.
I'm trying to think of what that saying is. It's like history doesn't always sound exactly the same, but it often rhymes.
Yeah.
I think we could be in for something very similar again.
40% up from current levels would imply what roughly $3,000, no, no, $3,600 price target. Anyway, we're already up. The gold price is already up, what, 28, 30% this year. What's a reasonable expectation for you into 2025? And again, nobody has a crystal ball. We're all just speculating, but what
Yeah.
makes sense to you from somebody in the industry?
Oh man, I hate that question.
Well,
It's so difficult. Um, I started in the business when gold was $300. If you had told me I'd still be in the business when the gold was 2,800, I would have said you were crazy. I remember it hitting 600 and thinking it was out of this world. I remember when it hit 1,000. I thought that was probably the most I'd see in my life. It's so difficult to predict these things. I imagine it continues to go. I think next year it breaks 3,000 quite easily. Um, I am not one of these guys who wants to see $5,000 gold because I don't want to spend $50 on a loaf of bread. And although that might be okay for people like yourself and I, because we own gold stocks, etc., it's not good for the average person walking the street. I spent time away from the gold mining sector, doing some other things on the more speculative side, tech, etc. And one of the reasons that I stepped away was I really didn't like the idea that the world had to be in a terrible place for gold stocks to do well. It just never really sat right with me. I think we started to get into this position when we put American Pacific together that we wanted to be transactional by nature. We wanted to focus on making money for shareholders, and building, what we've viewed um, as a well-run and well-executed company with a well-executed M&A strategy. I think we've been able to do that relatively well, and we've been able to get away from that. Oh, gold's going to go to $5,000, so you have to own it because you're going to need a gun and a gold belt when you go outside. I just don't think that's a great way to propel your company forward. Let's go and make discoveries. Let's go out and buy assets and sell assets and see shareholders do well. That's certainly my preference.
well,
Yeah.
I don't currently own any gold mining company, just full disclosure, but there are a lot of people out there like me. And the point I'm trying to make is that the general investor, perhaps like me, who has not gotten into the space yet, how would you convince him or even myself to get into the space if you were to make that argument? Take a look at my screen now, Warwick. This is the gold price once more overlaid with the GDXJ. And I know that the GDXJ has been outperforming the gold price in the last couple of months, but year to date, well, actually, it dropped a lot more, but that's been that drop has been higher beta. But anyway, year to date, it's about the same. Why would I take on the additional risk of buying a gold mining company, a
Mm.
junior for that matter, when I could just buy the gold bullion and year to date they perform roughly the same? What is the argument here?
This is a question I'm glad you asked me. When you buy junior stocks and you get into yourself into a bull market, if that is what we believe we're coming into,
Hmm.
gold junior stocks outperform the price of gold dramatically. The ones that do well can go up 30, 40, 50 times. The ones that typically just do okay kind of go up 10 times. I remember seeing this back in like '05, '06, where the least expensive junior mining companies were trading at $1, where now the least expensive mining companies are trading at 5 or 10 cents. It happens. Everybody misses that move from, 10 cents to 30, 40, and everybody piles in aggressively between 50 and $1 and above. It's a dramatic shift from what we're looking at in that chart today. So that's where the excitement certainly comes in. Here is my other point, and I wrote an op-ed on this a while back, about investing in mining companies. If your world of investors is this big, the world of mining investors is this big. It's
Hmm.
tiny, right?
Hmm.
And I think one of the things that we have to do better as mining executives is find a way to get out of just doing the same conferences and having the same conversations with the same people and try to access that investor world as a whole. It's one of the things that we're trying to do with this podcast that you mentioned, and just getting out and doing things differently. Not necessarily just acting like a mining company, but acting like an investment vehicle that people should be interested in.
Okay, but let's compare uh, a junior gold miner to another risk on asset, let's say a cryptocurrency. Let's just take Bitcoin, the
Mm.
biggest one. I know this is kind of an asset-like comparison because they have nothing to do with each other, but they're both risk on assets. You go risk on into a junior to speculate on its growth. You go risk on into Bitcoin, presumably also to speculate on its growth. I know some Bitcoin maxis would argue with me, no, you're supposed to use it as a hedge against inflation and this and that. But let's just take it at face value. It's gone up with the Nasdaq. The stock market has gone up well over the past year. Junior miners have done well when the Nasdaq has also done well. So
Mhm.
why would I buy a junior mining company over something like Bitcoin?
Yeah, great question. I mean, listen, I think if you could step back in time and buy Bitcoin when it was down at a few bucks, you'd be well wise to do so. The fact that where are we on Bitcoin now? About 75,000. That was my last look. I don't track it as closely as I would do the price of gold.
Sure.
Your move from 75 to 150,000 is going to take, it's going to take some work, right? Now, if you're going to compare that to a junior miner, you can see pretty dramatic moves in the course of a few days if you bet correctly. Now, maybe the more succinct comparison would be against some of these smaller crypto coins, right? Which I'm not as well versed at, or
Mhm.
saying like, hey, you should
Yeah.
buy this one, or you should buy that one. If it's the world you live in, that's your advantage, right? I mean, certainly junior mining is the world that I live in, so I've got an idea of which ones I think will do well. It would be difficult for me to look at a go on Binance and just look at a bunch of different coins and start picking ones that can be winners. That's a challenge, but that's really sort of your true game there. If you want the apples to apples comparison, it's the price of gold against Bitcoin and choosing which one you think makes more sense for your portfolio there. Look, quite honestly, I have played in cryptos, bought an ICO, funnily, right at the same time as my son was born. So I remember it quite well because I bought it off the floor of the hospital when I was there. Um, did quite well. It was early, that was 7 years ago. I remember it was quite easy to put money into it and more challenging to actually get the cash out. That's probably improved over the course of time because it was quite early. But I know it's a more regulated process in terms of buying stocks. So I'm more comfortable with that side of it, more comfortable with that part of the risk analysis. Difficult enough when you're betting on risk, but risking how you get your money in and out is also an additional challenge that I probably didn't want to take on at that time again.
Well, Warwick, mining under Trump, that's something
Mhm.
that people would like to know about. How do you see the mining regulatory landscape changing in the next administration?
Yeah, I mean, look, here's my hope is that, it's very like, I'm gonna be cautious how I say this because I don't want people to misunderstand. I think it's incredibly important that when mines are put into production or assets are permitted to move towards production, that you jump through those correct hoops and that you do things correctly. This business has changed a great deal from days gone by, where it was just you come in, you put in a mine, you walk away, and environment be damned. Those days, just to be very clear, don't exist anymore. Particularly from a public company standpoint, you're putting yourself and your directors at risk if you do something wrong. So it's very important to have proper permitting. Those timelines, though, can be reduced dramatically. What we've seen under this past administration was they were coming in with this Inflation Reduction Act, and they're giving money to companies, and they're trying to push these critical metals forward. But in the same time, they're putting all of these hurdles in front of them to actually get them in production. So is this really double-edged sword of you're going to be able to get capital, but you're never actually going to get to the goal line, or it's going to take you 12 years to get there? That is what I think under Trump will end up getting reduced. I think we're going to see now that these agencies will speed up and work in concert with the companies themselves to be able to move these assets forward. If you actually want your metals being produced close to home, you have to find a way to properly and expeditiously um, permit these operations. That's really going to be the key. I think you're going to see that under Trump. I'll give you a small example, but just from a permitting on drilling standpoint, because we're not in production, same asset in Nevada. We permitted under Trump in 4 business days. We permitted under Biden. It took 5 weeks. So, neither one of those are prohibitive, but when you put that in the context of trying to put something in production, you can start to see, okay, well, if it was going to take you 5 years, but now it's going to take you 12, that's a
Yeah.
big difference. Yeah, there's a real funding gap within that, right? And when you're in an environment where it's difficult to fund a lot of these junior companies, mid tiers as well, you start putting in extra timelines, and it makes it tougher and tougher.
What is currently the permitting time or time to get a permit, roughly?
Okay, so it depends what you're looking for. And like, so we focus on the Western US. You're getting drill permits different ways. So you have sort of a couple different avenues. If you're on Bureau of Land Management land, and you're doing things right, you can get it from anywhere between a week to a month. If you're on Forest Service and you're doing things right, you can do it anywhere from 18 months to 2 years. When you're getting into production scenarios, you're 7 to 12 years to put something into production. It takes time to get it right. Some of those numbers make sense, some of them don't. The comment always being that you want to make sure that you're doing things in an environmentally sensitive way and you're making sure that you're getting them right. And people should be held accountable for that, regardless of the timeframes.
Does the permitting time change depending on whether or not you're a senior or a junior?
No, not really. I mean, it can in just terms of funding requirements, right?
Hmm.
It's tough as a junior trying to put something in production is a real challenge. I think most of the juniors are there to, find great assets and then transact
Yeah.
with mid-tier majors. That's the bulk of them. Now, there are ones that have done it exceptionally well. I mean, I think um, I had the great pleasure of being able to work for Fortuna Silver really early in my career. I think they've got four mines in production now. I mean, that was a $10 million market cap when I worked there, and it's a $2 billion market cap now. That is the exception, not the rule. Those are phenomenal guys and a phenomenal team that have done really great work.
Well, let's take a look at your stock now. So, American Pacific Mining Corp, USGD on the CSE exchange. Like you
Yep.
mentioned, huge spike up this past week. You closed a deal. Tell us what happened here.
Yeah, for sure. So when we started this year, January 1st, we had about $2.8 million in cash. We owned 30% of an asset in Montana and 30% of an asset in Alaska. As of today, we have $16 million in cash. And we own 100% of the Montana asset and 100% of the Alaska asset.
Mm.
So it's been a real year of kind of head down working and finding ways to do creative M&A. Today's transaction was taking back 100% of the Palmer project, which is a 14 million ton VMS up in Alaska, so volcanic massive sulfide. It was under partnership with a company called Dowa Mining and Metals, who are a great partner. They own the largest smelter out of Japan. There was a bit of a divergence of views as to how to move the asset forward. Their real interest was receiving the zinc concentrate because they own the largest smelter and it's good, clean zinc concentrate. So we were able to cut a deal with them to take back the asset. They paid us $10 million US non-dilutively, so roughly $14 million Canadian. And
Mhm.
for that, we gave them an option where they can purchase the zinc concentrate, 50% of the zinc concentrate when the asset goes into production. So just kind of a unique, creative deal. Certainly, the market reacted very favorably today, so we're certainly happy to see that. Still think that we're probably one of the least expensive zinc copper developers going forward. I think we're roughly we're about 85% cheaper than the average today at 21 cents. And I think it closed around that level. So we're excited about the road ahead. Nicely cashed up, which is great, especially in what's been a challenging fundraising market. Having $16 million as a junior works pretty well.
Okay, well, I have to ask because that's my job. It's down. The stock is still down considerably, 34% year to date, even with this week's increase. If I take a look at some of the metals that it's tracking, copper, for example, um, well, first of all, I'll let you comment on what happened this year before we talk about the underlying metals.
Yeah, totally. And this is where this divergence comes in, right? Like it's been this risk off market where no one's had any real interest in juniors. And it becomes a game more of survival. You can show a chart there that shows gold's gone up and copper's gone up,
Yeah.
etc. But it just does not translate into these junior companies. When you're in these risk off markets, people don't want to write checks. They don't want to risk their capital. Again, they're more concerned about, keeping food on the table and paying the mortgage. It gets to be challenging. So yes, certainly been a challenging year, been a challenging couple of years. The thing that we saw back in 2021, look, there's lots of things to be self-critical on. I think the things that we're good at is being able to market the company, especially during the those risk-on times. And we've been pretty good at M&A as well. I think this was a good transaction today. We were nominated by S&P Global Platts for Deal of the Year when we picked up the Madison asset down in Montana. We lost to Cleveland Cliffs, but they did two $1 billion transactions. So at least we were in good company. And those are things that we'll focus on as now we're getting into a Trump presidency where we think it's going to be a more risk on market now that we're nicely cashed up and we can move this company forward with a couple of great assets.
What's your outlook on commodities that have to do with industry and industrial growth? Copper, for example, was one of the metals that you are currently in your projects and your deposits. It has had a pretty volatile year, climbing 34% year to date at some point, peaking around May, but then declining by another 20% from its peak. It's up only about 9 to 10% year to date. And I've been hearing all sorts of narratives throughout the year about why copper has been going up, why copper has been going down. What's your take?
I think copper, at least for me, is one of the most interesting assets out there right now. I think if you look at a lot of the major, like we focus down in the US because that's where projects are. A
Yeah.
lot of the major banks down there are focusing or are forecasting significantly higher copper. If you look at Goldman, they're talking about getting $6.80 copper by 2025. JP Morgan's forecasting a global supply gap. Bank of America is saying copper is going to rise 30% in the next 12 months. There's an opportunity for copper to do really, really well. So the question is why? JP Morgan also noted they were saying about a low pipeline of advanced copper assets. The amount of copper that's, come out of the ground up until now, you'd have to take out twice as much to get to be carbon net zero, sorry, by 2030. That's a hell of a lot of copper. I mean, it's going to be a real challenge to get anywhere close to that. Every American requires 12 pounds of copper each year to maintain their standard of living. If you look at things like EV vehicles, your average conventional car takes 18 to 49 pounds of copper. Hybrid electric vehicles take 85 pounds, and a plug-in hybrid takes 132. I think a Tesla takes like 180 some odd, right? So
Yeah.
this demand for copper, if you're going to go green, the quote unquote go green movement, you're going green through copper. There's just no other way about it.
I wonder whether or not the escalation of trade wars, assuming it does escalate under
Mm.
Trump, is going to have any impact on the regulations surrounding copper mining in North America. Presumably, if copper were to be treated like a critical mineral in the
Hmm.
U.S., the
Yeah.
U.S. would want to nationalize, or not nationalize, that's the wrong word. The U.S. would want to domesticate production of copper or the sourcing of copper domestically as much as possible, and not relying on Kazakhstan or South America or China.
You're bang on, man. That's exactly the thing, right? Like, and that's where permitting timelines and all these things will come into play. And that's where a Trump presidency will help mining incredibly well. And it's copper, right? That's really the play. Even with a guy like Trump, who's kind of and this anti-green movement, he's been anti-electric car in the past, but I think now that he's got Elon Musk running alongside of him, he'll shine up to that a little bit more as well. You're going to be in a position where they're going to want their own domestic supply, in particular in copper.
Well, this is something that we might see more of. Look at this headline here. October 16th,
Yeah,
GM to invest 625 million in joint venture to mine EV battery raw materials, the JV with Lithium America Corp.
yeah,
Lithium America. So we're starting to see car companies partner with mining companies to vertically integrate their source of critical minerals. Lithium, of
yeah.
course, is needed for the production of electric vehicles. It's in the core component in the battery. So,
Lithium's,
what's your yeah?
yeah.
What's your reaction to this?
Yeah, no, I'm pretty familiar with the lithium trade, especially down in the US. Look, again, I think under a Trump presidency, you're not just going to have this Inflation Reduction Act where they're going to be throwing money at these lithium producers, but you're going to see more of these big US companies wanting to own a piece, which is a great start. But then you're going to see these permitting timelines come down. You're going to see these projects push through a lot quicker than you have done in the past. The world is not getting bigger. The world is getting smaller, and these countries are looking internally for everything. Uranium is another great example, right? Russia is now saying that they don't want to export their uranium. The US is going to have to start thinking about that as well. Lithium, copper, uranium, these are metals that I think will do incredibly well in the next few years.
What, in your opinion, is the most critical mineral right now
Hmm.
for not just electric vehicles, but the transition from the economy that we have now to the economy that you think we will have in 5 years?
Oh man, I'm gonna go with copper. It's a bit of a homer play. I mean, we have copper projects, so that's part of it, I suppose. But if you think about things like AI, if you think about things like electric vehicles, any sort of the green movement, you're gonna need an awful lot of copper. The supply demand on copper is a tough one. They're usually those are the largest mines to go in production, so they have the longest lead time in terms of permitting as well. You look at the big copper companies out there, they're looking for copper assets. There aren't a lot of advanced copper assets out there. The Alaskan asset that we have is a good example of one. So yeah, I mean, I think to me, copper is the play.
Okay, what's next for America's or American Pacific Mining? You closed the deal. Congrats on that.
Thank you.
What are the next milestones that we as investors need to be paying attention to?
It's going to be a news heavy 2 quarters coming up here. Just closing on the transaction today, so we're fully cashed up for the foreseeable future. We've got a couple of great assets. We're probably going to look to transact on one of those assets here and move one forward on its own. So we'll
Wait,
spend time
wait,
down
sorry.
in
When you say transact, what does that mean?
transact by either bringing in another partner or
Hmm.
divesting of the asset and turning it into either cash or stock from another company. That would be smart for us to do at this time if we can.
Can
We're
you
going to focus
comment
there.
as to which asset? We're not yet.
Not totally yet.
Okay,
Let me get through today because we
fair
just
enough.
because we just closed this transaction. But yeah, this will be a news heavy next 6 months for us. We'll be drilling down in Montana. We'll certainly be very busy down there. We're going to get our feet under us now in Alaska. We've got a lot of cash. So we like M&A, right? We're transactional by nature. We'll be looking to both buy and sell as we drive forward here.
When are you expecting the drill result to come in?
Drilling results just came in out of Madison, which is the project down in Montana. We'll actually start drilling it again in January as well. The game plan there over the next 18 months is to get pretty aggressive, probably do 20,000 meters on top of the 54,000 meters that has already been done, and to put a resource on that project as well.
Excellent. Thank you very much. Before we go, we need to discuss your podcast, the
Yeah.
Speculators Podcast. You're a mining company. Why do you have a podcast? Let's start with that.
You know what? This came back to a part of our conversation earlier. One of the things that I think that we as executives need to be doing is finding a new way to communicate with the investing audience, and this to me was a way to do it. I travel all the time. I know I've been doing this for let's go with too long. So I know I've got been lucky enough to meet a lot of interesting people. So I kind of tap them on the shoulder when I travel. I'm often traveling for work, going to meetings, etc. And so when I do, I try to sit down with the more interesting people that I know and interview them and use that to obviously it's skinned for American Pacific. It's got the logos on there. It's got the stock tickers on there. We don't talk. I don't sit there and just promote the company. We usually talk about these people and their lives. So interviewed some interesting people. Michael Gentile, who's a major fund manager. David Williams, who's an incredibly well-known poker player and was kind of the face of poker during its big poker boom. Just recently interviewed Bruce Stein, former COO and board member, worldwide president of Mattel, the toy company, former CEO of Sony Entertainment, and a co-founder of Axiomatic Gaming, who owns Team Liquid. So interesting people with great life stories who talk about how they, sort of speculated either in stocks, either crypto, poker, their own lives, how that sort of ties in. And it's just exposing the company to people who wouldn't normally get a chance to see it.
Thank you very much. And we'll put the links down below to American Pacific Mining Corp and also to the Speculators Podcast if you'd like to check that out. Appreciate your time, work.
Thank you, David. Much appreciated.
And thank you for watching. Don't forget to like and subscribe.